XRP hit $1 this week. And I know what you're thinking. Is this the beginning of a bigger drop, or is this actually a buying opportunity? I've gone through the on-chain numbers, the macro data, and what some of the most followed analysts are saying right now. And by the end of this video, you'll have a clear picture of exactly where things stand. So stay with me, because the details here actually matter a lot more than the headlines suggest. Welcome to XRP Future Finance. Let's get into it. Before anything else, let's just be honest about what happened. Over the past 7 days, XRP fell around 8%. The broader crypto market dropped about 5.8% during that same window, which means XRP underperformed the overall market by a noticeable margin. That's not a comfortable thing to say, but it's the reality. A lot of that selling happened because the Federal Reserve's preferred inflation gauge, the Personal Consumption Expenditures Index, came in hotter than expected this week, rising at its fastest pace since 2023. When inflation data surprises to the upside like that, it signals that the Fed isn't going to be cutting rates anytime soon. And when rates stay high, money tends to flow away from riskier assets like crypto and toward more stable places. That's just how the market works right now, and it hit XRP harder than most. Now let's talk about that $1 level specifically, because it's more important than it might seem at first glance. In crypto trading, round numbers carry a lot of weight, not because of math, but because of psychology. When a coin approaches a round number like $1, it concentrates attention. Retail traders watch it, institutional desks have alerts set, analysts post about it. That concentration of attention is exactly what creates the kind of volatility we saw this week. XRP touched $1, and then something interesting happened. It didn't stay there. By Friday, buyers came in and pushed the price back up, and by Saturday morning, XRP was trading around $1.07, up about 3% in 24 hours. That's a real response from real buyers, and it tells you something about what the market thinks of that level. Here's where the data gets genuinely useful. An analyst named Ali, who runs Ali Charts and has a large following in the crypto space, pulled data from the UTXO realized price distribution, which is basically a tool that maps out where XRP holders actually entered their positions. And right around $1.06, there's a cluster of over 830 million XRP that were purchased at that price. That's a massive amount of coins sitting at that exact level, and the people holding it have a strong incentive not to let the price fall below their entry. In trading, we call this a volume block, and it acts like a natural support zone. The price doesn't always respect these levels forever, but they do create meaningful friction against further selling, at least in the short term. So what are the realistic paths from here? Based on the current setup, there are 3 scenarios worth thinking through, and I want to be clear that none of these are predictions. They're just the most logical outcomes given the data available right now. The first is that XRP holds above that $1.06 level, sentiment gradually improves, and the price works its way back up toward the $1.10 to $1.20 range over the next couple of weeks. This is the scenario the on-chain data supports most directly, because that volume block is genuinely significant. If buyers keep showing up at these prices the way they did on Friday, the case for a slow recovery builds over time. It won't be a straight line up, but the foundation for it is there. The second scenario is that XRP just kind of drifts sideways for a while, bouncing between $1 and $1.10 without much conviction in either direction. This happens pretty regularly in crypto when the market is waiting for a catalyst. There's no obvious positive driver right now to push XRP significantly higher, but there's also not a clear fundamental reason for it to collapse either. Sideways is actually pretty common after a sharp drop like this one, and it's not necessarily a bad thing. It gives the market time to sort itself out, it gives nervous holders time to decide what they want to do, and it sets the stage for whatever move comes next. The frustrating thing about consolidation is that it feels like nothing is happening, but in reality, the market is quietly making a decision. The third scenario is the one that requires some honest attention. If that $1.06 support zone fails, if sellers push through it with real volume and buyers don't step up, then the next areas where we'd historically expect to see buying activity are meaningfully lower. Based on Ali's on-chain data, 80 cents is where 923 million XRP were previously traded, making it the first major level of interest below current prices. Below that, 62 cents shows up as the single biggest volume cluster in the entire range, with over 1.16 billion XRP having changed hands there. And below that, around 51 cents, another 1.06 billion XRP were transacted historically. These aren't targets or predictions, They're just where the data says buyers have historically been willing to step in, and that information is worth knowing regardless of which direction things move from here. There's something else that came out this week that I think got less attention than it deserved, given all the focus on price. The XRP Ledger recently crossed a milestone that's actually pretty significant from a fundamental standpoint. It now holds more of Ripple's RLUSD stablecoin than Ethereum does. According to Ripple's own tracker, the XRP Ledger is carrying $810 million worth of RLUSD, compared to $760 million on Ethereum. For people who care about the long-term story of XRP, not just the price chart, this matters. Stablecoin activity on a blockchain is a direct indicator of real usage. It means people are transacting value on the network, not just speculating on the token. And surpassing Ethereum in any on-chain metric is a legitimate development worth noting. On the news side today, Ripple CEO Brad Garlinghouse made some comments that are getting a fair amount of attention in the crypto world. Garlinghouse said he's still bullish on Bitcoin overall, but he took a direct shot at Michael Saylor's strategy company and its approach to buying Bitcoin through a preferred stock funding model. He described it as financial engineering and pointed to Strategy's STRC shares hitting a record low as evidence that the model has real risk attached to it. He also suggested that the whole approach has pulled focus away from more meaningful crypto developments. Whether you agree with him or not, these comments reflect a broader positioning that Ripple has been consistent about, that XRP is built for real-world utility and cross-border payments, and that's a different story from what Saylor is telling. Both narratives have their supporters, and the market will eventually decide which one it values more. Let's spend a minute on the market structure numbers because they're worth knowing as context for everything else we've talked about. XRP's current market cap sits around $65.8 billion. Daily trading volume over the last 24 hours has been roughly $1.8 billion. There are about 62 billion XRP in circulation right now, which is 62% of the total maximum supply of 100 billion. And XRP holds the number 3 position by market cap in the overall crypto market, sitting behind only Bitcoin and Ethereum. A $65 billion market cap with nearly $2 billion in daily volume isn't a fragile asset. It's one of the most liquid digital assets in the world. That doesn't mean it can't fall further in the short term, but it does mean the structural foundation underneath it is substantial. The regulatory backdrop for XRP has also shifted considerably over the past 18 months, and it's worth reminding ourselves of that when the price is causing stress. The SEC case against Ripple reached a resolution, and with it went the biggest legal overhang the asset had carried for years. Since then, the Clarity Act has been working its way through the U.S. Senate, and it's specifically designed to create a legal framework that distinguishes between utility tokens and securities. XRP, which functions primarily as a payment mechanism, is widely expected to be on the right side of that distinction if the bill passes. Spot XRP ETFs, which launched in November of 2025, have now attracted over $1.4 billion in cumulative inflows. That's institutional money coming into XRP through regulated channels, and institutional money tends to be more patient than retail. Here's a practical way to think about what this all means depending on your situation. If you're someone who trades shorter time frames, the level to watch right now is that $1.06 zone. The way the price reacts around that level over the next few days will tell you a lot about whether this bounce has real momentum behind it or whether it's just a temporary pause before more selling. Volume is your friend here. A bounce on thin volume is less convincing than a bounce with strong buying activity behind it. If you're someone with a longer time horizon, the short-term price action matters less than the direction of the fundamentals. And on that front, the story has been improving. More institutional inflows, more regulatory clarity, more on-chain activity, and growing stablecoin usage on the network itself. One thing worth keeping in mind as you process all of this is that XRP's price history is full of periods that looked terrible in the moment, but turned out to be setup points for significant moves higher. That's not a guarantee of anything. Past behavior in crypto is a pretty rough guide to the future, but it is a reminder that the narrative around any asset tends to get most negative right when the price is near a low. The people selling at $1 this week are not necessarily the people with the best information. They might just be the most stressed. Meanwhile, the 830 million XRP sitting at that $1.06 level didn't get there by accident. Those are positions that were built deliberately, and the people who built them are watching the same charts you are. Let's also address something that sometimes gets lost in these kinds of breakdowns, the role of patience. Crypto markets move in cycles, and within those cycles, the individual days and weeks can feel extremely significant, even when they're just noise inside a larger trend. The macro environment right now is genuinely challenging for risk assets, and XRP is not immune to that. But Ripple's business, cross-border payments, institutional settlement, stablecoin infrastructure, continues operating regardless of where the price is on any given Saturday. The gap between what Ripple is building and what the price is doing in the short term can persist for a while, but historically, it tends to close. Whether that closing happens at higher prices or lower prices depends on a lot of factors, many of which are outside anyone's control. What you can control is how well you understand the asset and how clear your own thinking is about why you hold it. To wrap things up today, XRP touched $1, bounced, and is now sitting in a range that the on-chain data tells us is genuinely meaningful. The macro environment is a headwind. The RLUSD milestone is a quiet positive. Garlinghouse made his views on Saylor's model clear, and the support levels below current prices are real data points worth having in your back pocket. None of this is financial advice. It's just an honest look at what the data and the news are actually saying right now. If you've been watching XRP Future Finance for a while, you know we try to keep it grounded here, skip the hype, and focus on what's actually useful. If this video gave you something worth thinking about, share it with someone else who's following XRP, drop your thoughts in the comments below, and subscribe if you haven't already. We'll be back with more updates as this situation develops.